breathe a sigh of relief that the populist backlash has been successfully stymied?
I think that a lot of people will be doing just that across European capitals this morning. You know, the big narrative going into these elections was that the populist revolt was going to show Brussels, you know, that people wanted democracy closer to home. And indeed, the populists have done worse than they did 4 years ago. They've got about 25% of the parliament. 4 years ago, they had a third. So they have done worse. In some cases, for example, in Italy, Lega Nord has done really well. The Brexit Party in the United Kingdom has done very well. You know, they are, along with Angela Merkel's CDU, the biggest party in the European Parliament. But I think the overall trend, the fear that many commentators and politicians had about the populist wave has proven to fizzle out. It hasn't been as dramatic as some thought it might be.
Peter, we're seeing a lot of green on the screen on European equity indices today. Is this just a short-term relief rally?
Yeah, I think it is a short-term relief rally, and it's also on the backdrop of some stabilization and positive moves out of the Chinese equity market. But I think it's too early to say we're out of the woods in terms of rising nationalism and populism. I think the only thing it takes is another economic recession, maybe within the next year in Europe, and another potential refugee crisis coming out of the Middle East or Africa, and then you could easily see a surge in populist movements again. Because keep in mind, we have historically high wealth and income inequality in the world, and that will continue to drive elections and trajectories for the political landscape, both in Europe but also in the US.
But Peter, are European equity markets priced for political risk and the prospect of recession?
I think European equities are better priced for a recession and the political risk than, for instance, the US equities. But we must say, in general, equity markets globally are definitely the most complacent asset class out there. If you look across the FX markets, fixed income, credit spreads, they're pricing in a higher probability of a global recession compared to equities. We're quite bewildered of this complacency that we see in equities, being down only 4.5% from the peak in the MSCI All Country World Index is not a major move, given the confrontation between the US and China, arguably a slowing down macroeconomy. We have seen, according to the OECD's global leading indicators, the biggest decline in growth momentum since 2008, and here we are only 4 to 5% from the peak in equity. So I think there's a lot of complacency out there, but it's driven by a lot of negative yields. I think investors have very difficulties allocating their capital adequately.
Nina, what are the implications of fragmentation in the European political space for economic reform?
Well, I think that, of course, the key word, as you mentioned, is fragmentation. You see the entire political spectrum splitting, and the centre cannot hold, right? It was a terrible night for the traditional centre-right and centre-left parties. However, you have to look at the various groupings in the parliament, and the centre-right party, the centre-left party, the Liberals and the Greens, they're still variously on a pro-EU agenda. Nonetheless, will they be able to work together on things like Eurozone reforms, budget? Those are going to be the contentious questions of the Eurozone Parliament. And of course, let's not forget that those Euro populists will still try to do a lot to throw a spanner in the work, particularly on things like the Eurozone budget. So I think a fractured picture, fractured politics to represent the fractured new composition of the Parliament.